Hi, I am Jen Johnson with Remax Rising in Bloomington, Illinois, and what I put together was a series of podcast shows because I felt like as an agent and consumer that's been through the process of buying a house a few times, I felt like it was important to get the information out there, throw it out there for consumers to listen to, have, digest, because there's so much going on when you're in the middle of the transaction that it's hard to remember. Your head will be spinning. There's so much information, so many components to move through. So I decided to do this Let's Get Real tour with Jen Johnson Realtor. And today I have Suzi Nafziger from First State Mortgage, who is in lending. And she actually did the loan for our first house back in '09.
Yes.
A long time ago.
Lucky.
But you've been in business for a long time.
Long time.
So one of the biggest things is, why is it important to work with a mortgage company that's local? Suzi, if you want to just introduce yourself and tell me and the viewers a little bit about yourself.
I'm Suzi Nafziger with First State Mortgage. We're located at 1015 Exton Drive. Does that sound familiar to you?
Yes, that's the nice big red, white, and blue building office for Remax Rising.
So I get to share a building with Jen, which is awesome. My license to lend is 638037. My number's 309-275-7899.
Awesome. And got it on the speed dial.
Okay. So I think the most important thing to even start the process is figure out a budget for yourself.
Yeah.
I always like my buyers to be the driver of the program, not the program to be the driver of them.
Yeah.
Not to be forced into something that you're going to regret later. I'd say, get down, sit down with a paper and pen and say, okay, I pay rent, I pay $1,000. Could I go higher? Do I need to go lower? We need to establish a budget first, because sometimes it gets confusing when you're out there looking at houses and all of a sudden you're like, oh my gosh, I'm out of my price range, or I could have gone higher. So it's always nice to communicate with the agent and the lender of kind of where they want to be at for payment, and also the costs, because there's always cost to everything, and how much money can you front. Usually there's a few things up front that you need, like earnest money, which we could probably get into that later,
Right.
application fee, which is usually an appraisal fee. So you're going to need probably about 1 to 2%, maybe.
So when they first get started and they first contact you, do you have like a homework list or paper that you give them to figure out the budget?
I do. I have a checklist, but I also am old school. I've been doing this 31 years.
31 years.
I tend to, and I'll do the paper here. Here's my circles of the things that I do: rent and mortgage payment. So I usually start there. This is a blank page. Everybody gets a blank page. So how much rent do you pay? How much do you think you could spend on a mortgage payment? And we focus on these top two circles there just to make sure. Then we go down and just ask basic questions, because we have to get to know each other. So what do I need to get started? I have a checklist of items like 30 days of pay stubs, 2 years of W-2s, 2 months of bank statements. If you have a 401k, like a quarterly statement on that. Anything that you can think of that would add to the application. So your jobs, what if you get, like if you're a veteran and you get disability income, we need stubs to show that. If you pay child support, separate maintenance, or alimony, we need divorce decree and settlement statement. So we can make sure that the numbers are in the in their budget. So I think the biggest misunderstanding when clients are trying to do the online application, which you want to make sure that you trust who you're filling your information out to, because you're putting a lot of information into the system, which our system is like Fort Knox. Once you get in there, you're doing your username and your password, and you go in and out.
So they can create their own account when they go into your website.
Yep. And and if you have questions, you want to be able to trust who you're calling to ask those questions. The one main question on our website is a lot of times we ask that their bank accounts be connected to our system. So if we need updates, we can just go in and pull it.
Yeah.
A lot of credit unions don't participate in that, but a lot of banks do. You don't have to do that. You can provide the 2 months of bank statements, but
Yeah.
that just seems like sometimes if we're going through the process and you want to get clear to close, the magic word clear to close,
Yes.
meaning you're done.
A little more seamless.
Right, and the underwriter's like done, investigating. We take everything. We don't take your blood type. I don't know if that's coming.
Might as well.
But you want to make sure that we have a comfortable relationship. I always want to know a little bit more about you personally. I can maybe create also a loan program that best fits your needs.
Yeah. I love
So first-time home buyer programs, oh my gosh, we always have first-time home buyer programs. We have repeat loan grant programs too. So
Do those change throughout the year?
they do. So we have a lot of different ones. We have the Illinois Housing Development Authority grant program that you do not have to be a first-time home buyer, and you can get up to $10,000 on that program.
Nice.
There's different tiers, like there's a 4% times the sales price, there's a 5%, and then so on.
Okay.
That's a pretty popular one. That one doesn't run. I've never in 31 years have ever seen IDA run out of money.
Okay.
So the interest rates are a little bit higher on those, but not much. But if you're needing grant money, if you don't have your own down payment, that would be great. We also have the Federal Home Loan Bank that comes out every year. It does run out.
Yeah.
We get like $1 million. And we're going to be getting it in February 20th, I believe. And that's $10,000. Both those programs are income driven. So we would need to see where your income is. And it's
What
very
about
important.
Credit score.
Credit score 640 on IDA. Federal Home Loan Bank does not care.
Oh God! Wow.
So-
That's awesome.
So you can't combine all of these programs that I'm going to be talking about. Some of them I pick and choose. The next program is the Mortgage Credit Certificate.
Oh yeah.
This is my favorite program.
Yeah.
This is the one where you have to be a first-time home buyer or a veteran. So veterans can get it every time they buy a house. You get up to $2,000 of your mortgage interest back when you file your taxes. So it's a credit, not a write-off. It's a credit up to $2,000. You cannot combine the MCC and the IDA.
Okay.
So it has to be one or the other. So if you have your own down payment, always use the MCC. With the rest of the MCC and the other programs, you can add like a la carte, the MCC
yeah.
over to some of those other programs. We have the Town of Normal, that's matching funds. So you have to buy a normal.
Okay.
So if you put 2,000, they'd put 2,000. The one tricky thing about them is that if you absolutely can't buy the house without them, they'll give it to you. If they're like, well, you don't need it, it's not an emergency, it's not a, break the deal. So I use that one probably the least amount.
Right.
But if I can layer them and if I can show, I think someone had probably paid off a bunch of debt instead of putting down payments, so they needed that grant.
Yeah.
So there's ways around everything.
But that's one of the things that is a huge plus of working with a local lender because you're already very connected to the community and the things that are going on in the programs that we have in our community. And certain online lenders, we won't say that,
You just
they
don't know.
don't have access to that information.
And they don't have access to a lot of these grant programs either.
Yeah, so that's not like the best decision for the consumer.
Right. And sometimes it gets tricky if you're filling stuff out online and you don't know who you're talking to. They might promise you the world and deliver nothing. You might not close on time. You might not close at all. Because asking the questions in the very beginning, like let's just say, for example, we're commission employees. So commission employees,
Compensation is what we're trying to say now. But yes, we only get paid
if the
sale happens.
Yep.
Closed.
So for instance, let's just say, I ask a client, what do they make per year? They fill it out on their application and their title comes back commission.
Yeah.
Well, the only way that you can do commission is you have an average over the last 2 years. Because you can't just say, well, I make this. Because an underwriter is going to go look and have an average and use the W-2s and the year-to-date income to average that over. If the client puts that, say they make $10,000 a year, and nobody knows to ask the right questions, you get a good-for-nothing pre-approval.
Yeah.
So we stand by our pre-approvals. We do not send them out unless we know we can close the deal.
Okay.
Now, I don't know if you want to talk about any of the financial.
I do, but I have
do
a
that.
question really quick before. I know within the last year or two, they were talking about landlords being able to report for somebody's credit if the tenant renting from them
Yeah.
needs help with that credit score. How does that work? How
Well,
does that come into play?
It's kind of like a forced, or I'm not going to say pretend credit score, because some of the utilities used to do that too, utility companies. Sometimes parents will put kids on their credit cards for authorized users.
Yeah.
That might boost it, but the underwriter's still going to want other credit that they're paying. Even though it
Okay.
helped boost the credit, they're going to want to have their own stuff that they're paying, like 3 to 4 things that they're paying.
Okay.
So FHA is going to be it's a government program. It's going to be the easiest and the lightest on scores and debt to income ratios and that. It helps.
FHA as in first time home
Or
buyer?
repeat. FHA I use a lot if it's a first time home buyer or if someone's credit scores are a little lower.
Okay.
Because if you're putting less than 20% down, sometimes the conventional side of it is really hard to get.
Yeah.
The private mortgage insurance, which is another little thing that we
PMI.
have, PMI. So basically, way back when, you used to have to put 20% down to buy a house. So it was slowing the real estate economy. So they said, hey, banks, if we come along with this insurance policy that would not only get the borrower into the home with less than 20% down, it'll also protect the banks to go after to like recoup some of the costs for like a foreclosure. So underwriters and all that feel better. Investors feel better because they have a little insurance policy.
Right.
So the conventional side requires like 680
For the credit score?
for like that. Whereas FHA 640. Sometimes we can go down to 580. Just depends on different investors come and go on the lower scores. But FHA has one percentage, and whereas conventional might be tiered, it might go higher the less you put down.
Okay.
Because history shows the less you put down, the more likely you are to walk away.
Yeah.
So
Understandable.
Yep.
For sure. Okay, so what about some of the things to avoid during the home buying process? Once you decide, hey, I'm going to contact Suzi, I'm going to fill out the application, I'm going to start shopping for a house.
Yep. So I would say the first thing is when we get the application filled out, I need to view the credit. Let's just say your client has some, they're worried about, oh my gosh, I have some hospital collections, or I have this, or I better hurry up and go pay my credit card down. Just don't do those kind of things until after, because it doesn't cost anything to let me look at your credit and give you some advice. I'm also partnered up with a guy out of Colorado that I've worked with for 20 years. He breathes, eats, and sleeps credit. He's amazing. So I've had mistakes from clients. They go, hurry up and go pay for everything because they're so nervous. And then it might not have done anything to their credit score, where they could have used that money for something else to maybe spend your money smarter, not harder, and not pay off like a medical bill. Sometimes these medical bills don't do anything, but just sit there and not really cause any increase in scores if you pay it off. So
this guy out of Colorado that you work with, what exactly does he do?
He basically scrubs and cleans up credit reports. So if I say, hey, this guy's got less than 640 credit score, here's his accounts, and here's the balance, and here's the payment, he goes in and goes, oh, well, I can do that. I'll do this. How about you pay this down? Or he might have a deletion letter that he can get from like a company. Let's just say it's an in collection.
Yeah.
He'd say, okay, we're gonna pay this off, but we want a deletion letter back in our hands at the same time.
So he works with the client you're working with.
Correct.
Hand in hand together so that you guys can help a consumer that might not be the best credit situation.
Right. And he helps
they're
you get
financially able to buy a house. You
Yes.
help them build that credit during the process so they can get to closing.
Correct. And that's my biggest advice. Just let me pull the credit and let me look at it. And if we need his help, then that's the first person I'm calling.
Yeah.
I know even with people that don't have, they want maybe their scores higher to get a better conventional interest rate. I've also asked him about things. And the weirdest thing is sometimes when you have credit cards, they always say to keep credit cards within 30% of of the balance or the available credit.
Yeah.
But when you're going to pay things down, sometimes if you're like, oh, if you had that, Citi card paid off, that would be great. But if sometimes the little ingredients that go into making a credit score, if you pay it all off instead of the 30%, it'll negative
It
impact
hurts you more than helps
It's like
you
you can't win. It's a catch-22. So that's why don't do this on your own. Let us do it. Been doing it again a long time. But I know I've had some really big success stories with this guy over the years, so I
Yeah.
can't say enough about him. So don't apply for any new credit or, get new loans or refinance your car. You might think, oh my gosh, if I refinance my car, I have a higher interest rate and my payment will be lower. But that's going to be a hit on your credit score because you're pulling new credit.
Right.
So avoid doing anything like that. You can still buy groceries and you can still do all that. But if you have some money that's in a savings that you're using for your cash to close, don't spend that.
Don't touch
because we
it.
don't want to be short cash to close.
Right.
Don't change jobs.
Why not?
Well, I mean, if you have a solid job, you've been at your job for 3 years, and you get another offer, and you're going to start, and you're guaranteed to start this, and you're guaranteed to do this, not be on a 90-day probation period, because that could be, unstable
wow.
if you're on 90. So make sure you
Yeah.
talk to your loan officer if you're planning on changing jobs. I also had somebody change job before closing when they could have started 2 weeks later, and it put them over the income limits to get grant money.
Oh my gosh, that stinks.
It does. So just communicate all the way through. And we're paid to be accessible. So,
Yeah.
my phone is, of course,
Always
everybody has a small, email, text, call. We take phone calls on the weekends. We take phone calls after 5. We work when these guys
Yeah.
work, and they work a lot. So
Yeah.
that's what, but don't feel bad. I'd rather you ask a question than basically just go, oh, I want to wait till Monday, and then
Yeah.
your anxiety goes up. I just want, we're together all the way there.
Absolutely.
Don't miss any payments. Don't miss any rent payments. Bank accounts, we already talked about that. Large cash deposits. Okay, so cash, I know, cash is king, right? We can't use cash when you're buying a house. You can't use cash because you can't trace it.
Okay.
So don't pay cash for your earnest money. If you do a cashier's check, we have to show that where that money came out of the account.
Okay.
But we can't take cash for like the appraisal fee. That has to be all like either through debit or credit.
So you have
well.
to have a paper trail because
Have to.
then everything can be tied back to your account.
Yep. And sometimes those things are like checks and balances of money laundering, not that we're
Right.
trying to bust anybody for that, but we have to follow the same, mortgage banking rules that the underwriter is going to look at, pay stubs, W-2s. If there's large deposit and it's not income, we have to document it. Maybe grandma gave you $1,000 for a gift. Well, we have to document that and get a gift letter signed by grandma and the borrower. And then also we have to have a copy of the check and show that the check's cleared grandma's account.
Okay. Is that the same thing if Uncle Ted is giving you money for a down payment?
So as long as it's relative, they always say it's got to be blood relative or relative. It could be a fiance, but it can't be the agent,
Right.
can't be the attorney, can't be a broker. It can't be. You could maybe get a bonus from your job. We have to just count that.
Okay.
But it's not. Can't be your next door neighbor. It can't be somebody that you don't have an established relationship with.
Got it.
So, but those are available to ask for. Now, changing bank accounts, not a big deal. It's just going to cause you more. Like you're going to be chasing. I'm going to be like, okay, give me proof that closed, or give me proof of the new account. So
Okay.
the less you can stay under the radar is what I say until you hear that magic word clear to close is the best advice I can give.
And even still, then at that 5 to 10 days with that clear to close to closing,
Yep.
you still have to be really careful
You do.
because the day of closing, you guys do something and
We actually, there's a couple things that we do 10 days prior to closing on conventional loans. We pull a soft pull credit. It doesn't affect your scores, but we want to make sure that your financials are the same. So we don't give a clear to close until that 10th day. Like, so if we have 10 days and we pull it,
right.
the couple days or 3 days before, guess what? We're going to verify your employment again to make sure you're still employed. So if you're like, your boss calls and be like, that's crazy, mortgage people are calling me again. We already went through this 2 weeks ago. Well, that's why we have to do final checks.
Yeah.
Make sure you're still employed, because we have had that happen where the person changed or just said, oh, I'm going to go find a job after I move in or after I do that. Just make sure everything stays the same until you actually get done signing your mortgage and your note and everything, and you're done and you're walking out the door.
The closing table.
Then you guys can do what you want just make sure to make your payments and your mortgage payments.
Do you give your consumers a list of things like that when they're working with you?
Yeah.
So they have a heads up from the beginning
Yep.
and know what
We
to
have
do
a
and what not
roadmap,
to
we have
do.
checklists, we have lots of things that we send to our clients.
That's awesome.
It's kind of like an art, not a science. I mean, some things are like, oh, you have to, checklist, but we give this big client documentation checklist that if it applies to you, we need it. But it's also, if don't stress if you're like, I don't know if I need that or not. I can usually tell from the application and from talking to somebody for the first 15 minutes what you're going to need.
Okay.
So, because you have to, again, it's important to ask the right questions. If you don't ask the right questions, it's kind of like garbage in, garbage out. Here's a pre-approval, but oh, I forgot I've only been in commission job for a year and we can't even use the income. So
Yeah.
it's real important to ask that. I've had internet lenders and out-of-town lenders. One person said to me, oh, I just take every loan I can, throw it against the wall, and like spaghetti to see if it sticks.
Oh
And
my
that's how
gosh.
they run their business. And guess what? 2-3 weeks later, the poor borrower and the seller and all these deals crash because now the borrower doesn't qualify because they didn't ask the right questions.
That's crazy.
I know, it's crazy.
But your main goal through all of this is to help somebody get into a new home.
Yep. And try to get them as much free stuff that they can.
Yeah,
So
all the
fun.
grant money.
Yes. And it's just every loan is different. Every person's different. Just like when you're showing houses, everybody's got different tastes.
Uh-huh.
I think that's why I love my job so much because it's not stale. It's not the same thing. It's always
like
different.
snowflakes.
Yeah.
Everyone's
Right.
different.
Everybody's different. And our little motto is we don't say no, we just tell you how to get there. So let's just say we pull credit and we have to do a credit. The credit guy says, hey, you need 30 days and here's the things you can do. So
Mhm.
it's okay because we put you on a plan.
Yeah.
So some places are going to be just quick to, you know what, I don't want to bother with you, so we can't help you out. Whereas we're more apt to because we don't get paid until the loan closes. We want to help you as much as we can.
Yeah.
Not shove you into the highest sales price, not shove you into something that you're uncomfortable with. Just basically kind of it's a counselor more than a loan officer.
Yeah.
You're basically counseling them through this. This is the biggest purchase of your life.
It is.
So it's very important that we hear questions and we answer them, and nothing gets left unturned. So when you walk away from the closing, you're gonna be like, all right,
Yeah.
that was a lot of moving parts, but I'm good. There was a lot of communication through it. I felt comfortable. I trusted everything because I know when I'm
Huge.
dealing with somebody, I want to trust. And again, putting your stuff out there on the internet and just going, oh, well, I got an internet approval.
Not the best bet. Because we hold hands all through the process.
Right.
And then, they're likely to come back.
Right. And again, it's the biggest purchase of your life. You want to make sure that you feel comfortable and that you have everything that that you're getting yourself into, not just thrown into.
We already went over a lot of this stuff. Why don't we talk about some of the down payment, how much it could be, or what factors play into that?
First-time home buyers, if they do conventional loans, depending on their credit scores, they can put 3% down.
Nice.
You can use the grant money to help you with that. So the grant money, let's just say you're using one of them that's $7,500. You can use part of it for your down payment and part of it for closing costs. It's fine. You can also have sellers pay closing costs. Seller on a conventional loan, the seller can give up to 3% towards seller concessions to help pay for closing costs because maybe not enough there. FHA is 6%, so it's a little bit higher that can help out.
Yeah.
A seller can never pay for down payment.
No.
Never. They can pay for seller concessions. So if 3% is too much, they'll make you lower it.
Mm-hmm.
If there's only $2,500 in closing costs, that's all they're going to get. You can't make a profit.
Yes, because the
deal.
more credits the seller gives, it affects the benefits that the buyer is going to be
Correct.
taking advantage of while going through the process with you, right?
Right. I definitely, on the insurance side, there's a lot of insurance stuff going on right now.
Yeah.
I know in my payments, when I'm running estimated payments, the insurance has really gone up. So I've gotten caught a couple times with it being $150 more or $200 more. And all of a sudden, guess what? That's not what you want to spend per month because we can always check the taxes. Taxes are easy to check.
Yeah.
But it's almost like we're telling people to call insurance companies or call your agent if you're looking at making an offer on the house, so we know to use the right numbers. Really important right now.
Good information. Yeah, I'll have to check in with insurance
Yeah.
people and see if there's a ballpark for,
Right.
you know,
It's a
home
scale.
price bracket or
it-
whatever they have.
Catherine City, which is Catherine Peterson in our office here for
Yeah.
Country Insurance. She is, I said, okay, just give me is it 2%? It's 3%. She's like, Susie, there's so many moving parts in it now that's even more like we always say there's a lot of moving parts in trying to generate a credit score
Mm-hmm.
because, you know, it's, or sorry, an interest rate because it's your credit score, your loan amount when you're closing it as a purchase, or, you know, all these different things, kind of like baking a cake.
Yeah.
All these ingredients go in there. So Catherine says that their insurance scale is the same. Like the roof is huge important these days.
Yes.
Can't be, if it's over 20 years old, you got to have it replaced. So things like that. So I would definitely recommend calling insurance before you put an offer on the house, just to make sure the payments and stuff are there.
Okay.
Yep.
Very good. How about what kind of ways they can lower out-of-pocket costs?
So the lower out-of-pocket cost, the seller paying,
Mm-hmm.
the seller can pay your closing costs. Sometimes there's a premium in the interest rate. So let's just say, hey, I want to take a little bit higher interest rate than what the lowest is, and maybe get a little premium credit back, a lender credit back.
Oh, really?
So that's, I mean, that happens a lot. Even if there's $12 left, it goes back to the consumer. That's how we run our company.
Okay.
But sometimes you can go an eighth or a quarter higher if you're like, how do I make this thing work?
Yeah.
I'm short, you know, $1,000.
Yeah.
So you might want to do that. Another way of lowering your costs, of course, is getting all the grant programs.
Mm-hmm.
You have to have 1% into the deal, though. So if it's a $200,000 house, you have to have at least $2,000 into the deal to get this grant. Grant
Okay.
rate.
Well, that's good to
So you got to have some skin in the game.
Yeah, you need to have skin in the game to follow through. I mean, it's probably most people's dream, and I personally hate that people have to pay rent, and for the amount of rent that people are paying these days, what, it's probably more cost effective and ends up being a little bit
Right.
cheaper than paying rent
Right.
when they buy a house.
Absolutely.
And they have interest and taxes and
Right.
insurance included in that payment amount.
Right. I did have a client that had an X amount of money to put down, and he, you know, you first think oh my gosh, I want to put all this money down on the house, and here's where I want to be, but here's where my payment's going to be. Well, we took part of his money. He had a car payment that was like $1,000, and he had enough that he could put down plus the 10,000. With the 10,000 car payment was $300 a month. So we basically spent the money smarter, not harder.
Yeah.
We used a little bit over here because it's still going towards the house purchase.
Mm-hmm.
You're just trying to spend it smarter, not harder. So now his financial picture was a lot less to pay his car off than it was to put it over on the mortgage loan, which might have only affected it by $100. So definitely look at the whole financial picture, not get so cued into going, okay, I want to put everything down on the house. Let's see what you got over here on the left side to see if we can make it a prettier picture.
Yeah. So one thing I was wondering recently, do you guys go through any kind of homework or tips when somebody is closing on the house for afterward when the mortgage is going on, how they can pay it off quicker
Oh,
or
yeah.
pay it off smarter?
The quickest math way is the 2 extra payments a year towards the principal balance, not towards the payments. The principal can cut your term in half.
Oh,
So you
wow.
can either do it monthly, or maybe you do it at the end of the year when you get your tax refund. As long as you do it every year and you're applying 2 extra payments towards the principal, you can cut that 30-year into a 15. Okay, here's the other part though. If you have other debt, go after the other debt first. Leave the
Mhm.
mortgage last, because mortgage interest is tax deductible. Your car loans, your credit cards, they're
Yeah.
not tax deductible. So again, spend your money smarter, not harder.
Mhm.
Leave the mortgage last. When you're debt free, then you go after it.
Okay. What about this theory where people are paying half their house payment by month, like bi-weekly,
Bi-monthly.
twice
Yep.
a month?
Yep. So basically you have to kickstart your payment first to make the first payment. So let's just say it's January 1st and you make your first payment. You always have to make it first, and then you're going to pay a half more in 2 weeks and another half. If you don't kickstart it up that first time, you'll be behind.
Okay.
So every 2 weeks you can set that up.
So the best way to do that though is probably online
Yep,
banking.
online or the servicer that we sell our loans to, you can call them just like you call us. If you're like not getting the answer, always come back to your loan officer. We can always, because we don't kick you to the curb after the sale.
Right.
We want to still be in your lives and help you and have questions and things that you get in the mail, or someone might call you and say, hey, I had a client call and say, this company keeps calling me to refinance and it's only 0.10 less, but I'm going to, get $10,000 cash back and my payment. I'm like, what, and what? And they
So-
charged about $3,000 or $3,500 in points, and it was only going down. So, the rule of thumb is, again, go back to your original loan officer. Even though you're not paying First State Mortgage, if you're paying Wells Fargo or U.S. Bank or some of these other big guys that we buy their money through wholesale channels, always call us if you're not getting them. But the rule of thumb the first year is it has to be at least a half a point less. And you don't want to pay silly points
to refinance.
to refinance. We offer a free refi program. If it drops a half a point that first year, we'll refinance you for free.
That's awesome.
And the one thing that's important, and the reason why I've been doing that for years, is because I don't want you to get tricked into spending money and refinancing for something that's not worth it at that point.
Yeah.
Because it's got to be a tangible benefit.
Mm-hmm.
So
when they get their mortgage at First State, does it stay with First State that whole time?
Sometimes, most of the time, 99% of the time, it's going to be sold off in the secondary market.
Okay.
The secondary market, just like if you shop at Sam's, it's wholesale buying money. We buy the money through these back doors of the wholesale companies like Wells Fargo, U.S. Bank. They're not just the retail ones in town here that you drive up to. They're wholesale departments. So anytime you buy money in big pots and bigger pots of, you get it cheaper.
Right.
So our rates can stay really cheap. We don't charge junk fees to give you that because we get paid every time you make a payment. It's called mortgage. It's called interest
Okay.
payments. So if we were to sell, let's just say someone's like, no, Suzi, I need to have it in town. I want to drive it through. Maybe I want to write a check.
Yeah.
Maybe I want to walk it in. We do have those loans available. They're still 30-year fixed. They might be a little bit higher on the interest rate because it's a smaller pot of money. We're not selling it off.
Yeah.
So,
that makes sense.
Yeah. So
very good. So the whole purpose of my little episode show that I'm trying to have running is just to get information out there to consumers. And that's why we didn't really talk about going percentage rates right now at the moment, because I want this to live out there for a year.
Right.
Because all the content and information you've given is incredibly valuable information, and it's not going to change. But the rates change daily.
They do change. And if you want me just to go down a little bit where they're at right now, 30-year fixed rate, 6.125, 15's 5.5. And then IDA has some rates. That's the grant money that I told you it's a little bit higher. Like a conventional one, 7%, 6.625 and 6.625 on these other programs. I say don't get so caught up on the interest rate. Get caught up on what's your payment going to be.
Yeah.
The interest rate, yes, it's important because it does, but you want to have all of your ingredients in the total payment, your principal and interest, your taxes, your insurance, your PMI. Do you have association fees like if you buy a condo?
Right.
That's going to be all in your payment. We don't necessarily take the payments for that, but it's got to be in your total picture because you definitely just want to understand what you're doing. Is this comfortable for me? Is this comfortable for my lifestyle? Maybe you take more vacations and you want to buy a smaller house because you want to take more vacations. Or maybe you're starting a bigger family and you need a bigger family now. You need a bigger house. You need, instead of 3 bedrooms, you need 4 or 5 bedrooms. But I think it's just meeting with Jen and going over what they want in a house and then what can they buy for their budget. And until those two meet, I think that's, you probably shouldn't be looking around. You need to make sure your budget meets what the size of the house is.
Yeah, make sure you can make that purchase before.
Right. And
so that 6.1 rate, really good.
It's really good
compared to how it's been the last few years.
I mean, they've
like
been
2 years.
They're very, very historically low right now. Now, of course, COVID was a lot lower, but you know what? I don't think that's going to happen in our lifetime, unfortunately.
Not.
If I could really have a crystal ball to tell you where I think the rates are going to be, I'd be a millionaire and I'd own an island.
Right.
But I'm going to say that I don't think it's ever going to be that low again. So for you people out there that are like, I don't want to list my house because I have this 3% interest rate and everything's gone up from,
Everything.
taxes, insurance, food,
Yep, the cost of
travel,
living,
cost of
everything.
living. So if you are saying that you don't want to move and you don't want to get out of this because your interest rate, that's the same thing like saying I'm not going to go to the store and buy eggs because they're more
Because they're
expensive,
twice
or
as
milk,
much.
or I'm not going to go on that family vacation because this is more. Everything is more right
Mhm.
now. So just don't get so caught up in the rate. Get caught up on what the payment's going to be and what's going to come out of your pocketbook.
All right, good deal. And I also wanted to mention about the rates and whether they're locked in for the length of the loan or if they change.
Yep. So 30-year fixed, all the fixed rates are fixed for 30 years. There's a 15, 20. We actually have they're trying to roll out a 50-year. I don't agree with
Oh,
that.
no.
Then they had a 40-year, but
No.
all those are fixed. The only thing that can change your payments are taxes and insurance. Pretty sure the taxes are going to go up every year.
Oh,
Therefore, your payment's going to go up.
Yeah.
If you go, we don't do a lot of adjustable rate loans. When the rates are like in the eights, hopefully they never get to that point. Then
Yeah.
sometimes the adjustable rates, like it's a 5-1 ARM, so it's only fixed for 5 years, and then after that 5th year, it could go up or down depending on where the market's at.
Yeah.
So those might be for the more savvier buyers that aren't scared. Maybe they think they're not going to be in the area longer than 5 years.
Okay.
But with supply and demand right now, the fixed rates are kicking the ARMs butts right now because the ARMs are not being sold or not being desired. So therefore they're priced out.
Yeah.
So
So do you have a lot of programs that can help people that have been in their house, say, 20 years and they would like to do some different renovations
Yeah.
or repairs to their house?
So we offer equity lines of credit, up to 80%. So they don't give you all the, they don't give you the full amount that you have in if you would sell your house, but they'll go up to that. And so it's a line of credit that you can, let's just say it's 10,000, I think is the minimum. You can use it, pay it back, use it, pay it back. It's kind of like a credit card. You just use it. So maybe you want to do a new kitchen, new cabinets or flooring or whatever.
And
That's
that's
always there.
equity value that you
Yeah.
have in your
You're
home
utilizing it.
that
Yeah.
you've already
Mhm.
paid down on
Yep.
the loan.
Yep. So then when you go to sell your house, you're going to have a first and a second mortgage. Second mortgage, if you keep all your receipts, if you're doing home improvements, those are tax deductible, but talk to your accountant.
Oh, nice.
Talk to your
Very
accountant.
nice. Awesome.
We have construction loans. Say if you're buying, I've done a lot of purchases that require the house needs a lot of work. This first time home buyer said, I really want this, but maybe the appraiser says it's less than average. All the stuff needs to be fixed. What's it going to take? Well, we can do a 6-month construction loan. So say if you get bids and we need $10,000 worth of stuff because there's no flooring or there's no cabinets or whatever, you definitely have to put at least 10% down. I squeezed one through at 5%.
Oh, wow.
But it had grant money. So
That's
the
awesome.
6-month construction, it let us use the grant money to help with all that. So we go in there, they have, obviously you're getting bids from people to fix the stuff.
Yeah.
You get this all fixed, and then once it's all fixed, we do a final inspection, and then we do what is called refinance. So then you refinance into a longer term.
Okay.
But sometimes some of these houses, I know you've seen them, they're like only cash deals.
Yes.
So we actually won over a cash deal because it was a construction loan, and we're going to close on this thing before anything even gets done.
Nice.
So we won the bid because we were higher on the price, on the offer.
That's awesome.
Yeah.
And it's nice to be able to work with you when we're working with clients. I know you give people a budget in the beginning, and sometimes there's a little buffer. And even when we were looking at a house, it's like, well, $10,000. And I remember our agent saying, $10,000 is only $50 a month added to your house payment on a monthly budget. I'm like, really?
Every
So
$1,000 is about $10 a month.
every $1,000
About
is
10.
about $10,000.
$10 per month.
$10
Off.
per month. Oh, got it.
Yeah.
And now does that change with percentage or interest or
Nope.
taxes or
That's just like, when 2 extra payments a year will cut your term in half.
right?
It's not exact science. It's just a quick math thing to
Okay.
kind of go, okay, if I'm spending an extra 1,000, that's $10 extra a month. Or if I'm spending 3,000, it's $30 more. You know what I mean?
Right. Because if somebody's looking at a house that's 200,000
right.
and they find one that's 210,000 or 215,
Right.
they aren't looking at that price point because they don't think they can do
Right,
it.
right. And we can always call and run payments. But I'm just going to go back to the insurance. You got to make sure you get the insurance quote.
Yeah.
Because that's the new thing. All our industry is going through so much stuff. It was the appraisers first, and then it was you guys, and then it was the lenders, and now it's the insurance. It's like there's so many moving parts, but insurance, get a quote before.
Yes, and I've got a great insurance agent I'm going to be doing an episode with too soon. So I just want to say thank you so much,
Yeah,
Suzi,
thank you.
Nafziger, First State Mortgage, for joining me today. And I
It was
always
my
appreciate
pleasure.
being able to work with you and have my clients work with you.
Thank
And
you.
everybody's always happy.
It's just fun. It is our jobs. Our job is fun. Sometimes it's hard, but for the
Yeah.
most part, the rewarding part at the end.
So keep up the
Yeah.
great work, and maybe we'll do another one later
Okay.
with some updates.
Thank you.
Thank you.